Hello guys, glad to have you on board again. Today we're going to do kind of a swing update today because yesterday was kind of the monthly analysis, more a broad-based analysis. So today we're going to just dig a little deeper into the short-term activities we could have ahead of the Fed. What are the early signals that I can perceive out of the market at the moment? And from what I can see, yen is strengthening. That doesn't mean the yen is strong. All it means is that the yen is getting a little bit stronger. The dollar is weakening, which means it's still pending, obviously. But what happened yesterday evening by Google's publishing the earnings release doesn't really please the market. So we were in a very, very good mood, but still it feels like shadows are grinding our way there, down the ground. The thing is that the Fed is going to be the big catalyst, all right? So once again, Wall Street is just pick up the good news, let it go with the bad news. So we're waiting for the next good news to come over. So definitely the Fed could be another party pooper, but we're just waiting for it to potentially be a party rider. So the thing is that we're expecting the Fed, and it's hard to say what they're going to deliver. It's hard to say how the market will take that. So way too many uncertainties to trigger trades. All I'm saying is that we're trying to highlight areas in the stock market, in the markets, that may suggest low risk opportunities. So I've been highlighting many of them. We're going to talk about the gold. We're going to talk about the USD GPY, NZD GPY, CAD GPY, all of those assets that have been going absolutely on the opposite way of the stock market. Suggesting that once again Wall Street is ignoring the risk. They better hope and brace themselves if the risk ever shows up, because there will be a lot to catch up on, which means probably falling off a cliff might be coming along the way. So it is hard to say. Once again, I cannot anticipate the Fed. It's way too dangerous, and moreover, U.S. stock market has been proving me so wrong recently, then to be honest, I wouldn't necessarily be surprised if it just proved me wrong one more time. So I need them to show me some proof that I was right. So I need the prices to do actually fucking something. So we're going to talk about the VIX as well. What could be the potential target if we were about to revive the dead man walking that we have right now, and what it could be. So first of all, cryptocurrencies. It is hard to say. What we're having in front of us right now is very unexpected, because like I said, now we do have a second, and it's closed. Is it? Yes. All right. So it's a closed structure in here. So from what we can tell, we probably have a mature range. How can you say that? Once again, the rules are pretty simple. You've got, what the fuck? Oh, you've got first signal in here, second signal in here. Is the opposite square signal, right? One below the price, one on top of prices. When you've got these in a short period of time, I mean less than 50 to 60 bars, you can consider that the range is probably maturing, all right? It's getting very noisy, which generally is a sign of a mature range, which means at that stage, normally you should be able to work out the range structure. That's definitely what we thought. It's a bearish trend channel. The thing is that it is hard to say if buying the breakout is viable or not. I still stand for what I said. I think there will be a bullish breakout of this, but I think this signal in here suggests be cautious with this. Don't take that as a granted thing, because we had two breakouts in here, first one and second one in a row, suggesting this one has been orientating this to the bear side. So I think if we go out of this, if we get out of this by the upside, I think there is a risk that there is a strong pullback coming along the way just to fuck up the stop losses that might have been left behind this level. So be cautious, all right? But I think putting a stop loss in here, if you trade the breakout, isn't a viable choice to make, because we're probably going to get down this area afterwards. At least there is still an underlying risk suggesting it might be probable. So that doesn't mean you cannot trade the break up. You can. It just means you have to put your stop loss further away. I think putting the stop losses in here or in here is good enough. In here, kind of a little bit of a risky trade. I would say putting it in here definitely makes sense to me. If you do this, and if you can pay for that kind of stop loss, then I would say, all right, no worries. And I think it's possible, it's viable. If you take that out of a daily trade, just have a look at this. All right, it's going to be a long position though. So if you were about to buy this breakup, put a stop loss in here, all right, and target this area, let's say 240, you got 1.51. For a breakout trade, it's not that bad. Generally, you got a 1-to-1 ratio. So I would say you can take this breakout, but at least make sure that you have a stop loss that makes it viable, because if you put it below this low, man, it probably isn't going to work. All right? So that's the only reason why the only context in which you can forecast to take this kind of trade. Otherwise, you just don't take it and you wait for the price to break the major resistance, which is $190. You can very well see that we've been putting a shit tons of low volume in this area. So the thing is that whenever we get there, bam, we break, and we're probably going to instantly get to 240 boxes right after. So I'm still waiting for this breakout to show up, just like it's been happening for IOTA. Whenever there is a good news, we can see that inflow can very well show up out of nowhere. So the thing is that if there is any positive news flow coming out of Ethereum, you can be damn sure that we're going to break this resistance almost instantly. The thing is that I don't know what the hell is going to come out of Ethereum's company, but the thing is that I see early signs of price and early signs of speculators going in the same way as I do, which means just a tiny bit of a news could be just more than enough to trigger the breakup. But I think the market just waits for something to show up. So hopefully Vitalik or someone else would just bring us some good news coming out of the Ethereum blockchain, and if such thing happened, I think we could very rapidly break through those levels. Obviously, in between, we're going to range and consolidate, and we can eventually break up without even the need of an unexpected news. So either something good shows up, it's great, it will facilitate the process. Otherwise, we just range in here, try to hold up to the valuation, and at some point, range will mature, and when the range will be mature, we'll be more than enough ready to fuck up the resistance without even the need of a news flow. That simple as that. Either we stay here and consolidate, and at some point we will get up to this resistance again, and I think it won't hold anymore, or something helps us in the process. That's for cryptos. Now, as like I said, we're going to talk dollar, we're going to talk yen, because as you can see, the dollar is pullbacking, and I really felt like that. Like I said, I'm triggering the stop losses because there is no other choices. I remain bullish on Eurodollar. I just triggered some partial stop losses because I was leveraged, because I was forecasting the trend to show up. So I just put it out all those trades, but I'm still buying. I'm very narrowly buying, and my stop losses have been putting way further than the current prices, but I'm still buying the Eurodollar because I don't nearly even think about a bearish trend coming all over the way. So what happened, I think it's just for speculators. It's just that, oh, there was so much sellers of dollar. Let's fuck those guys, and then we'll buy out, then we'll sell again. So that's exactly what may be happening ahead of the Fed. It is hard to say, but what I can tell is that we've got a selling signal right into the bearish context with an exit fucking signal, which means this one, you had to trade it. This one had to be traded as well. So the thing is that back to speculative leverage into the dollar, because well, it might be obvious, because obviously Fed is coming along the way. So you goddamn don't know what the hell's going to happen. We can very well be there by tomorrow if the Fed pleases the market, which I don't think is going to happen. But anyway, if it doesn't, then probably breakdown coming along the way, which means we tried up, doesn't work out, bam, we can be damn sure that the next stop is below 95 on the DXY. Concerning the yen, we've got a strengthening, so it is not quoting at the moment. It will reopen higher. As you can see, all the yen pairs are losing strength today, so the yen is gaining momentum, probably 0.20% out of this level. So as you can see, we're probably at the previous highs, and we can expect them to be broken up. We can see this, all right, just like I said, look at this, multiple information suggesting what we have. Oh my good lord. Give me my goddamn thing. All right. So in here and in here, viable information is the process. So we got a mature range. This range looks like a bearish wedge. The thing is that the bearish wedges generally gives us a little bit more context. So we can expect a little bit more downside to come along the way. So it is not yet mature for the yen. And all I said is that buying, definitely yes, all right? But like we said earlier, if you do buy, then just make sure your stop loss, as I said, further away, because that structure may just be going a little bit lower than expected. The thing is, we don't know for sure, all right? You don't yet know about that. The structure could be mature any fucking way. It is just so hard to figure this out, all right? So all I can tell is that the range is maturing. We will be ready to trade a breakup, but I think that if we fail to get up to 90.2 with candle closes, I think there is a high probability for just a rebound. So that means if for some reasons the yen were to be sold once again, that means Wall Street would try to extend probably to a divergence on top of historical highs, just trying to get higher, failing, and then here will be where the shit hits the fan, when we'll have bearish stock market, bullish yen, bearish dollar, and then that's probably the moment that the shit will be probably hitting the fan, and that's the moment I'm trying to catch up. So not necessarily just right now. So we're looking at the yen closely. If it gets out of control, the range is mature. So like I said, we're mature for a bullish breakout, and if this fucking bullish breakout shows up, then like I said, you don't fight it, all right? This thing is probably going to be bullish. That's what I forecast anyway. So if it goes bullish, that means it's not good for the stock market, all right? So we'll see if Wall Street and the invisible hand does everything they can to just manage the yen under control to avoid capital outflow from the stock market to get into safer areas like the yen, the gold, and all those stuff. Gold as well is starting to get and gather some steam, and my question here is whether we do have an accumulation or just a pending area in here. We're loading on bulls to just freakingly break them down. That's an option. I don't know. The thing is that I wouldn't even trade this. So like I said, I think yen is possibly to trade, but with a large stop loss. I think gold is a little bit too dangerous to trade because this area, if broken down, is going to be accelerating. So either you buy with a very tight stop loss below those lows and you brace yourself for the Fed and hoping it's not going to be too volatile with the dollar. And in that perspective, you're going to target just a little bit higher than the previous highs. And no more than that, targeting the top of this triangle structure, targeting $1,355 approximately, no more than that. All right, we can eventually let it go with a little bit further away if things really were about to go to deteriorate, but you may not speculate on this at the moment. You need to wait for the context to clear up. So obviously Google's been publishing later yesterday. It didn't really please the market. We're minus 7% trading at the moment, and we're reversing. So one more unicorn falling off a cliff. Minus 7% is nearly not even nearly a bearish signal at the moment. It's just pull back into support area. So the way I see this, all right, we pull backing below 1,200, so we're in here at a pullback. So yes, it's a hell of a drop. I mean, we were just flushing 2 weeks of stupid trading in here, and we'll pull back into this. But still, it is a support area. So I would say selling just right now out of Google, kind of dangerous. I would still be a little bit patient for eventually pullbacks to at least this area. At least this area, all right? So I said there's no rush to get back into Google, even though the earnings release are disappointing. They definitely are. I think we're going to probably pull back to some volume area. So I would say we definitely have to trade 1237 afterwards. So I suggest, even if it goes down, I'll wait for a pullback to eventually trade and putting a stop loss out of the previous highs. But I think they're not safer yet. So I would expect some kind of a range to build itself out of this price. I think that what's is the most probably coming with this thing is something like that, right? We range for a bit, and then if it goes down, then this is where I'll get to it. I think at the moment, getting straight bearish and fully bearish might just be too much, all right? So wait, I think it's too big of a gap to be selling just at the lowest price that we're going to be offered today. All right, so we definitely look out for this one, as I will, but still too dangerous to get in here just right now with this bearish gap of 7 or 8%. So having a look at this, obviously having a look at Apple today, it's going to be showing earnings as well. General Electric, so you know the drill. So the thing is that today is important, tomorrow is important because of the Fed, so the next 48 hours are going to be volatile. The question I wonder is how the fuck the stock market can hold up that big. That's just crazy, all right? What we're having right now is absolutely fucking crazy. So yesterday we went historical highs in an intraday basis just to lose all the gains in just a few hours. In just a few minutes. Bam, we just lost it all. I tried, bam, not working. So we're pulling back. The thing is that we're very mature, like I said. This trend, this 1 hour trend, is not even a trend. I mean, we're definitely final excess kind of trading. If you're having a look at this, once again, just zoom in out, all right? Just look at this, all right, bam, this is definitely where you set your goddamn pullback, all right? I'm going to change the color. This red is annoying. Can I change this shit? Alright. What color are we gonna pick up? Black? Yes, black does work fine. Alright. So the thing is that this is where we definitely see our pullback, alright? Bam, divergence. Even though it's really, we were already divergent in here, so this could very well have been a pullback. But once again, you don't know for sure. The thing is that this was a potential pullback. This could have been a potential end of trend, right? Final excess, but no, pullback, another set of end of trend, another fucking pullback, another set of fucking excess. So this market is just not trading anymore. What we're doing in here is just we're trying to go as high as we can, as long as we can. This is not trading. This is what I call the crab kind of trading. We go up, we don't consolidate. We go up, we don't consolidate. We go up, we don't consolidate. We go up. We're trying to do any fucking thing. We're waiting for a catalyst with a slightly positive inflow. Still the same old stuff. I mean, the problem we're facing at the moment with Wall Street is this. Let's just switch. No, not this. This. I mean, what we have is still a positive inflow out of ETFs. We'll also have share buybacks, even though they're narrowing significantly. We still have some buybacks. All right. So anytime the share buybacks will get the fuck out of context, if they will stop buybacking their shares, or that the ETF volume will start asking out, anytime this happens is when the shit will hit the fan. Like we said, investors are at the market. They're waiting for the Fed. They're waiting for a signal, either to sell or either to buy the historical high. So they're waiting for the Fed to tell them what to do. The question is, what will they do after the Fed? I don't know. If the smart money decides to buy the historical highs and get some inflows out of this market to sustain after the ETF pulling back probably and share buybacks being reduced, then this will probably sustain price out of historical highs and will probably stay there for a quarter or two. Option number two, the smart money doesn't buy. Even worse, if the smart money starts selling the resistance, ETF volume will probably ask out, so another set of selling volume, very few share buybacks in the front of this, which means a lot of fucking sellers and absolutely no buyer in front of them. Like we said, it's very less likely because everyone forecasts this to play just fine, according to the plan. We shouldn't be having problems ahead, but still, there is a high probability it can show up. It is not negligible. The risks are very dangerous because if we fail in here, like I said, it could be just the end of this trend. Even how mature we are and even how brutal these two sets of waves have been to the pullback. Because I stand from what I said yesterday, I think what we've done is that in here, the Fed should have been pushing us down. And we should have had the exact same thing afterwards. This thing, we should have had it, but we should have had it out of this area. And we should be there right now, all right, 28.20, and we should be selling exactly like I think we should be selling in here. And it's just in here there was an abnormal, some kind of abnormal pricing that we're probably going to have to face right along the way. So that's my scenario. I don't know what the fuck is going to happen, but I think we can't escape trading 2800 as a specific area to see what the hell's coming along the way. Either the smart money buys this area and then we're going to go higher, or they don't. And if they don't buy it, then this is just a motherfucking big range. And if we fail in here or in here, then we're going to go straight line to the bottom. All right. And like I said, this straight line is 15%. So that's the problem. We've been crashing down the liquidity. But if something goes even just a bit wrong, this range is a fucking 5% range. So this is enormous, which means we can scroll up and down 5%, so 1/4 of the market valuation, just because we don't know what to do. We don't know where to go, so we can scroll up and down 20 to 25% of asset valuations in the US stock market, just because we're lost. And we have to admit it. We're fucking lost. We don't know what to do with the growth. We don't know if growth is going to come over or if growth is going to deteriorate. So let's be honest, we don't know a goddamn thing. So why are we goddamn buying? Simply because, like I said, we've got some dangerous positive inflows coming out of dangerous speculative areas. Share buybacking, which is not speculative, is more like, oh, we have so much cash, we don't want to create more stuff because we don't think there is more stuff to create. We're not going to raise wages. Fuck them. We're most likely going to surrender this money back to investors. So great, share buybacks, but like we said, there is two contexts in which share buyback generally occurs. On trend pullbacks, on long-term trend pullbacks, when the asset managers in the companies basically think that there is a way more growth to come later, so there's no reason to put the prices down. They have cash, so they're spending it in share buybacks. Second option, they're share buybacking at late stage trends to just hold up to the valuation, give a lot of money back to the investors, hoping for things to sort themselves. When they don't, then generally means the market is stopping up, and then volatility is increased to the downside. That's the two cases in which it happens. I barely imagine that we might be trading the first one. I very well imagine we're trading the second one. Question is, I don't know. Maybe we're just pullbacking at the moment ahead of a 4 to 5 years nice growth period. I don't think, but I could be wrong. Like I said, I'm not going to trade this unless prices prove me wrong again. Prove me right again. All right. So aside from this, so I'm going to watch closely, obviously, at all the stocks today because Apple could bring down a lot of people with them if they fail today. I'm looking at the yen, I'm looking at the dollar, and obviously all the scenarios. I mean, NZD GPY is just working crazy great, just like we said. I mean, this is my average short price. It's not the best, obviously, but I'm leveraged on this thing, all right? I'm trading and getting ready to trade this. Just look at that, all right? Once again, pure fucking facts, all right? Market top, market bottom, market top, market bottom. What do you see? All right, we've been trading the trend channel multiple times, so this is not the standard way of accumulation. Remember that a normal accumulation would have been context, trend channel, context, and then we break. All right, in here we've done the range inside the trend channel, so we've been accumulating bearish. You can expect a breakout to show up, and when it will, I think we'll go even lower than my target in here, than my targets in here. So I still tend to believe NZD GPY has been a fucking pain in the ass. It's been way too long to build this fucking market top, but this is going to bring up the gains. It's been long, it's been painful, but motherfuck, it's going to bring the gains any fucking way. So I'm soon to come for a massive reinforcement in here because now my average price is further away from the prices, so I'm getting ready for a breakdown to occur. We tried in here, we're just pullbacking, but I think we're going to accelerate soon. You can see we got a strong area in here, so I can put another trade. All right, just in here, we go there, I'm reinforcing, it's a breakdown area. All right, so I'm going to reinforce one more time. I've got a comfortable short price in here now to allow me, which means this reinforcement, it's just going to bring my average price just a little bit down. So that's great. That's why I'm speculating. As you can see, I haven't been doing quite a great job. When I do a great job, my average price is in here. It's even more comfortable. So right now I'm not, which means I have missed many reinforcements, like there was probably one in here that I couldn't take, but as in here, mature range, we definitely have been accumulating in here and to the downside. I think we're ready for just a wrecking fucking market. Just see how much room we've got in here. I think first of all, we might be stopping in here, but if we don't, we can go even lower than that. And that means this was just an accident and we're gonna go lower than that. That's two options. I will obviously secure the trade out of this area, definitely will. And I think I'm going to trade first target in here and second target below the context at 76% fib. All right, but I think this is where I will lock on my gains. All right, breakout, lowering the exposition, fully leveraged in this area, and in here, profit taking. And if things don't show up, bullish signals in here, I'll even target at number 3 lower than the previous lows. All right, so for now I'm waiting to see if this was just an accident or if this was the end of the trend. And in that perspective, this will have been the pullback and the final excess. And in that perspective, we're probably going to buy this area. I don't yet know. All I can tell is that it all depends on how strong the NZD will be. All right, I think the yen any fucking way is going to be strong. It's just the NZD can be strong as well. All right, that's a possibility. I don't think it will. The reason why I think NZD have been overvalued for way too long is probably going to lose some strength. CAD yen I think is working just fine as well, and I got an average short price which is comfortable enough right now to target some breakdowns. We do have lower highs, so we have got every fucking thing we need to go ahead of a nice breakdown in a 4-hour chart context as well. So as you can see in here, we barely got to touch the context, but I think we can consider this as mature, as done. So we do context, trend channel, back to context. You know what is coming over? I think we're about to break the fuck down. All right, so watching out for this one as well. I think the yen is about to break out in the forthcoming days, not necessarily just right now, but the timing is coming closer in a swing perspective. Sorry. Regarding WTI, which I think is the final asset class we can having a look at, I'm expecting us to build a range in here, 4-hour chart context. So in a 1-hour context range. All right. So I'm waiting for signals for range in there. So what I just done is pure and simply this. Right? Just look at that. You'll see how easy this is. All right. Just like I said, I identified an opportunity. I want to get myself into trading this range area. So what I've done is just this. Put it in alerts, all right, using framework and trending range alert. So I want to be alerted anytime we retrace 61% and got into the resistant context. So what I'm doing right now is waiting for this goddamn range to show me some actual information. And instead of looking at the goddamn chart, I put the alert, I move to something else. Anytime something interesting shows up in the WTI, I'll eventually get to sell this. But at least I need 61% retracement, and I need prices to be in the resistant context or close to it. That's it for today. I think that's mostly what I wanted to share with you guys. So awaiting from the Fed, I suggest if you do take anticipated trade, very low leverage, try to secure the trade. But if you put the stop losses at break even or too close from entry price, be aware that tomorrow's Fed can be volatile, and then you're probably going to be stopped out even if you end up being proven right. So I suggest if you do take those trades, low leverage, so you can just put absolutely no stop loss. That means, yes, I told you to trade without stop loss. Oh God, that's a shame. No, it's no shame. It's just that you need to have clear and clean invalidation level that you will trigger if the daily fucking candle close breaks through them. But you need to be aware that there's going to be probably volatility, and that this volatility will create upper shadows, lower shadows out of the daily candle, and you don't want to be stopped by them. That's just it. You need to have clear and clean invalidation level, but you're triggering your loss taking or profit taking or target secured only at the end of the day because you don't want to be stopped out of a stupid shadow. I'm having a close look at what the hell's happening right now. I think I've said it all. No, VIX, like I said, we have to talk about this. So it is hard to say. We're going to give multiple options. So like we said, VIX failed to break the resistance the other day. We've got a mature range support in here. Question is, what do we do with it? As we can see, we try to break up every time, but still doesn't work out, which means we don't get to the target, and we reverse every time. But we do also have stop hunting, which means anytime we try to go bearish, it doesn't work either. We're just trying to trigger stop losses, we're building range structure, and anytime we do this, we still go higher. So what I would say is that we've got multiple options. For our first option, this one, which means we're heading into this we're into this thing, and we're probably going to have another set of bullish waves coming with the Fed. And it gives us a cluster area near 16, 17, and in this area I'll probably lock on some partial gains out of my VIX trades, which means I'll make a first profit taking, probably 33%, no more than that in this area. All right, locking on my gains in here just to make sure that I'm not going to be fucked by another price contraction after expiration, heading toward expiration, because they could very well do this. We go there, and bam, they just sell hard to maintain lowest possible close for the expiration contract. Remember, that's what they did every fucking time we've got a rollover. They want to roll over at the lows. Here, any fucking time we do close at the low because there are too much sellers in volatility, and if they end up being proven wrong, they're going to lose so much because they do trade with leverage, probably, and that's the danger, all right? That's a very dangerous area. These guys are playing a dangerous game, but still they keep on playing it as long as they can until the day they lose it all. So the problem is, I'll lock on my gains in here just in case, but 30% because if things had to go wrong in here, which I think is very likely, then we could just go up to 40 in a straight line. We were expecting this. Remember what we said? There is a cyclical pattern going on through VIX in which the next fuckable area could be around May the 1st. So the thing is that that's exactly what I was forecasting. If things had to get out of control, with the Fed doing another 180-degree reversal, if this is what's coming, then it must be really ugly, and it can be, like we said. I wouldn't be surprised if the VIX were about to explode to 40 or 50 area. All right? That is not the most probable scenario, because everybody hopes just everything is going to be fine. No one wants things to go bad. All right, so it is me neither. To be honest, I don't necessarily want the US to fall like shit. What I care about is that if they do it right now, it must be violent. It's not going to be great. It's going to be probably destroying some wealth. It's probably going to destroy those who've been buying the stock market recently. It's going to fuck them. They're going to lose money. We might have a tiny recession, but still, I think we got everything to survive. That doesn't mean it's going to be the end of the world. The problem is, if we keep on going higher and higher for bad reasons, this is where the shit will really be dangerous when it'll hit the fan. And it's certainly going to happen someday. So the problem is, I'm okay if the market keeps on going up. I think that's great. I'd rather like to have things going well than going not well. But still, I think at the moment, we very well might think about what will be the consequences if we don't pull back the monthly trends at the moment. We have to breathe out. It's simply that. We've been breathing in for 10 years. Breathing out is just normal. It's healthy. Just think of it as a human body, all right? Like I said, to me, the stock market is just a stupid parabola of humans in general and life in general. Right? It's a cycle. It's parabolic. It's everything. It's just at the humans level. It's like our own reflection in a psychological or a philosophical perspective. It's definitely us. The market is like us. You can study market just like you would study the fucking human soul. It's something that you'll never ever goddamn understand, just like a black hole. Right? You can't see any fucking thing inside. Everybody tries to do this for decades, not to say centuries. They're trying to figure out what the fuck is inside our brain, what the hell is consciousness and everything like that. It's a goddamn black hole. You'll never be able to see inside, and if you ever dig to fall inside, you're never gonna get the hell out. So there is not a chance, all right? Understanding life would mean you need to understand what the fuck is death. And no one will know that because no one came out from death. That's just a black hole, all right? So this is exactly what the hell is happening with the stock market as well. We're creating a shit ton of wealth out of here. Anybody who try to understand what the hell is the process that makes that just gets to see inside the black hole, and no one gets the fuck out. So will we ever understand the market? Never, ever, because we can't. That's just simple as that. It's like understanding life itself. No one will understand that. So no one understands the market. No one understands life. Still, you can live. Let's be honest. Do you really need to understand life to live? No, you don't. That's exactly the same. Do you need to understand the goddamn market to trade? Not at all. What we're doing in here is just surfing the wave. Right? Consider the black hole as a crazy attractive thing. Everybody looks at it. It's important to understand what the fuck is happening inside. Still, if you want to make money in the market, what you care about is the gravitational force. What we care about is that if you throw a $10 bill, it's close to the event horizon, it's going to come back to you with an additional dollar. That's a good game. I mean, that's all I fucking care about. Anytime I throw a 10 bill, I can get a dollar back, an additional dollar. So that's great. That's how I make money. And that's all I fucking care about. Understanding the gravitational force around the black hole. What happens inside? I don't give a shit. It's important to have some conceptions and to imagine what might be inside in a personal perspective, just like a physicist will be passionate with the black hole and trying to understand what happens inside. But let's be honest, it's trying to understand. But if you want to profit from the black hole, all you fucking care about is the gravitational forces. In the stock market, that's exactly the same. What the hell is my gravitational force in here? It's just my indications, my technical indications. I know how the stock market works, but I goddamn don't understand it. I know how the physics works close to the black hole, what happens inside, what the stock market itself is, and what happens beyond the event horizon. I goddamn don't know. And I don't give a goddamn shit. Because if I did, I would just be losing like endless time of my life trying to figure out something I'll never be able to understand. So like I said, you may have your own personal ideas of what happens beyond the event horizon, but actually you'll never know. So you can try figuring this out for your entire life, you're never going to get the answer. So let's be honest, if you're trying to understand the market, you'll never ever get to the answer. So you can try searching for years. It took me 4 years to figure out I'm never going to get to this, so I just let it go. And you're really going to have to go to the same conclusion. All right? So anyway, I'm going to stop here not to make this one too long, but I think the black hole theory and comparison in here is definitely applicable to the market as well. You can take that and apply this. It's passionating. Everybody likes black holes right now. It's kind of a thing, all right? Or at least it's a thing for geeks. But just be honest. Will we ever figure out what the fuck happens inside? No, we don't. There are movies like Interstellar give you some dreams about what the hell could happen in there, but still, no one will know. No one will ever know. And whoever is going to be able to know is never going to come back of it. So, that's it. That's the thing. And that's exactly it about the stock market and the markets in general. Right? They're too complex, but still, they have some physics laws. And as long as you understand those physics laws and that you can profit from them, that's all we care about. The rest is just theoretical, philosophical, and we will talk about that, all right? Trying to have conceptions about the market and things like that. But this is not trading. Trading is putting an order to buy or to sell, exploiting the market's physics, and at some point, physics may be surprising. All right? Like right now, the market doesn't even react to physics. But still, I think physics will show up anytime soon, and they'll just correct what's been done recently. So I will conclude with this. Once again, still same old thing because I receive so many emails on a day-to-day basis about the goddamn US stock market. When will it go down? Don't you fear that you could be wrong? Anything like that. The thing is that I don't fear I'm being wrong. I just don't know about the timing. I think that things will not be great for the US at the moment, but if it doesn't, and if I still get to be proven wrong, I'll just switch my timing to after the re-election. If Trump gets to be re-elected, clap, clap. But like I said, he's not going to make his second mandate till it's end. So I'm going to have to switch my timings, but that's all I'm going to be doing. I'm going to remain selling the US no matter what happens because this is not about time to buy. All the physics says it's going to be massively dangerous. So if you want to get your ass down this for short-term profits, go ahead. Just be aware that the risk is rising every dollar we put into this market. All right? That doesn't mean you need to sell and hold. All right? Let's be clear. Selling and holding doesn't work in the stock market. It's the best way to get ruined even faster than buying and holding. So the thing is that that's not how you do. You don't buy and hold the current prices. You don't sell and hold. All you can do is sell the shit that you have. Right? If you have some stocks in your portfolio, you can start selling them, and normally you should have done that way earlier than that. And if you've already done, then you just need to do nothing, and you wait. That's simple as that. If you want to speculate bearish, once again, what we're doing right here is highly fucking speculative. So you need to be honest. You need to be clear-sighted with you. What you do in here, you do it with a portion of your capital, you do it very cautiously, and you take limited amounts of risk. All right? Like I said, I know some of you guys are like in a sell and hold manner of approaching trading. This one, I know how it ends, and I don't want you guys to go along this road. So if you're sell and holding right now, let it fucking go. Even if that means you're losing at the market top, you'll be sustained longer in trading if you do this today. If you're holding to your selling entries because you think it has to reverse, that the physics will obviously catch up on the market. Yes, they will. But when is the actual good question. And when could be just in a few days after the Fed, could be in a few months, 2 quarters from now, could even be 2 years from now. Do you think your account will be able to handle selling and holding for 2 years? Let me tell you, the answer is no. So, do you want to lose your stocks? Do you want to lose your account? The answer definitely is no as well. So, can you sell and hold? No, you can't. All right? So please don't do it. I know some of you are doing it anyway. No matter what I say, you want to see for yourself. Then if you do this, then just make sure that you're not trading with your entire assets, because if you lose them all, then you're just out of the game. You take the exit door, whether you like it or not. That's how it ends. So the problem is you won't do that. If you do this with a portion of your capital, you want to see for yourself, you want to test, go ahead. You'll take the lesson sooner or later. But still, all I care about is for you to survive if you take this risk. All right? That's it. Bye, guys. See you later. Tomorrow, obviously, is a holiday. So don't expect a video tomorrow. Or maybe when the baby's nap, time will show up eventually, but I'm not making any promises. If there's nothing tomorrow, obviously we'll see each other again in Thursday, and we'll try correcting the remaining 50% of the MCQ tests. Bye, guys.